Hello, everybody. It was definitely an ugly session overall for the market after the FOMC meeting. Stocks did not react well, and the NASDAQ led the way down with a pretty ugly sell-off. The bounce attempt is looking worse and worse, but, still, we could continue to bounce around here. You never know. The next session tomorrow, we could be up 2.50% on even higher volume. But based on the way individual stocks look and leading stocks look, we're in a lot of trouble. And it wouldn't surprise me if we end up hitting new lows. The NASDAQ 100 down 2.48%. The Russell 2000, nicely, though, was only down 1.50%. So this kind of gives a hope that maybe if the big cap stocks like Facebook, Netflix, Apple, Google, and Amazon, if these guys, continue to sell off, hopefully, the NASDAQ 100 will catch up with like the Russell 2000 and Dow Jones Transportation Average, and we start to see some leadership there. On a positive note, even though it's an ugly intraday reversal and heavier volume up at resistance, the Dow Jones Transportation Average is only down 0.88%. So that in the Russell 2000 was better than the NASDAQ and NASDAQ 100 sell-off. S&P 500 was down 1.09%. So it's bad, but it's not terrible. But I tell you what, this is definitely not a market you'd want to buy. So bottom line, if we move sideways from here and base out and hopefully set us up for a March rally maybe, or if we move sideways here, hit resistance sell off, that's fine. But as of right now, the verdict's still out. We're still in the trading range with those 2016 lows and with those really, like I'd say, December resistance levels that used to be support. So kind of in a box, and until we get out of that box, I don't see, much happening. And that's with the NASDAQ using even the old highs here, or even the gap down session here, and then the recent lows. So it's just hard to be super, super bearish here when we're kind of oversold on a lot of our oscillators. As you can see here, it's a mess. I'm so sorry for that. I haven't really cleaned them up yet, but I can track them. But overall, you can see the oscillators are more near the lows than they are near the upper portion of these charts, and that's all I'm really trying to convey here. Same with the Russell 2000, Dow Jones Transportation Average are all more near the lows than the highs, so it's hard to be too bearish here, but at the same time, the setups aren't out there to be bullish. The only setup that is super bullish still is Cray. Cray, that viable gap up that I would never have bought anyway, but it turned out to be a viable gap up off the contract news. 34.98, it's now 38.46, but that's another thing. The stock has only moved from around $35 to $38. Yeah, it's a good little 10% gain, in 3 days against this market, but, it's nothing crazy. And with this strong accumulation, now what comes into play with Cray, if Cray can pull back on lower volume to about that 35 area, would like to maybe, get long on a bounce, maybe off the 50-day moving average if the market does find some kind of support. But as of right now, it's pretty ugly. Cray was the only stock that I underlined on the long side. The only stock I underlined on the short side, TBPH, is not a name that I would short. It's kind of in the middle of no man's land. There isn't a whole lot of room on the downside, not a whole lot of room on the upside either, so it's just not a good short. So overall, really no plays today. ENOC was a short idea. Intraday 2 days ago, my God, around 7, that would have been perfect. It is now at 524. That's a nice 25% drop in 2 days. And then also LPTH, didn't go short it back here when I should have. And, I'm going to regret it around that 340, 350 area, and it's now down to 250. But, it's not a huge, huge decline. And the stock was holding up pretty well in the middle of the market sell-off, so I'm not going to beat myself up too much. Now, there are no long signals, no short signals, but there are a couple of take profit signals. NVRO is closing below the 50-day moving average on above average volume, but it's closing above this 60 low a day, the low a day here on the January 20th session. So as long as it's above 60, it's not a full sell, but it is a 50% sell, so we're locking in more gains there with a 19% gain. And then USAT, short signal is over here. It's closing above the 20-day moving average on above average volume, so we got to lock in 50% with a 1% gain there, so nothing too fancy. But, overall, as long as it stays below the, 312, 308 307, it's still a good position, but as you can see here, it is closing above the 20-day moving average. So got to get rid of 50%. So 1% game in that name, and then NVRO, my brain has already forgotten what I just said that was, 20%? Yep, 19.64%. So that's about it. Definitely, you want to stay very liquid here. Cash is king. Definitely not the time to be calling for a bottom. And I tell you what, whenever you get a distribution day this quickly into a rally attempt, that's never good. You don't want to see distribution days unless you've already had a series of follow-throughs of the follow-through days. So overall, the market looks still like it's under a lot of pressure. Don't try to be a hero. Cash is king. Focus on those intraday, low price, low float, trading huge volume in the pre-market sessions, the gap ups, the pullbacks, then that breakout to new day highs using buy stops. I did not follow stocks intraday today as we have a huge swell on Maui, and with the market being the way the market is, and intraday names not being aplenty as they were and or moving like they were. I'm kind of on a wait and see what the market wants to do mode here. Remember, not a lot of great rallies start in January. Some start in February, but not a lot. So the earliest I can really see us trying to find a bottom that we can rally from and get any kind of decent upside would be March.